Money is built on something we cannot touch. Trust. We trust banks to protect our savings. We trust businesses to pay their workers. We trust governments to protect currencies. And we trust that tomorrow the system will still work. But history has shown how quickly that trust can disappear. In the 1920s, the United States experienced an extraordinary economic boom. Factories expanded, consumer spending increased, stock prices climbed, optimism seemed endless. More people entered the stock market. Some borrowed money to buy shares, and prices continued rising until they didn't. In October 1929, the American stock market crashed. Fortunes disappeared. Businesses failed. Banks collapsed. People lost their savings, their jobs, and their homes. But the crisis didn't remain in America. International trade contracted. Financial stress spread across borders. Countries around the world were pulled into what became known as the Great Depression. Factories went silent. Unemployment soared. Families struggled to afford basic necessities. In some countries, economic desperation helped fuel political instability and extremism. The crisis demonstrated something humanity would never forget. An economic system could appear powerful right before it became fragile. But 1929 would not be the last time. Decades later, the global economy would face a completely different shock. This time, the crisis would begin with something modern civilization could barely function without: oil. And the consequences would reach almost everything. The world survived the Great Depression. But economic crises didn't disappear. They changed. By the early 1970s, modern economies had become deeply dependent on one resource: oil. It powered cars, factories, aircraft, transportation, and global trade. Then, in 1973, an oil embargo sent shockwaves through the world economy. Oil prices surged. Fuel became more expensive. Transportation costs increased. Businesses faced higher production costs, and consumers paid more for everyday goods. But something unusual was happening. Prices were rising, while economic growth was weakening. Unemployment was also increasing in many economies. Economists had a name for this painful combination: stagflation. High inflation, weak growth, and unemployment. The crisis demonstrated how dependence on a critical resource could spread economic pain across borders. But another transformation was already happening. The financial world was becoming increasingly connected. Money could move between countries faster than ever. That created enormous opportunities, but also new vulnerabilities. In 1997, those vulnerabilities became impossible to ignore. The Asian financial crisis began in Thailand after intense pressure on its currency. The Thai baht fell sharply. Investors panicked. Capital fled, and the crisis spread. Indonesia, South Korea, Malaysia, and other economies experienced severe pressure. Currencies fell. Businesses struggled with debt. Markets crashed. Millions of people felt the consequences. Once again, the world learned a familiar lesson. Financial panic does not respect national borders. One country's crisis can become another country's problem. And as globalization accelerated, the connections became even stronger. Banks, markets, companies, and governments were becoming parts of one enormous financial network. That network would create extraordinary wealth. But just 11 years later, a crisis beginning inside the American housing market would travel through it with devastating speed. And this time, some of the world's largest financial institutions would stand on the edge of collapse. By the early 2000s, the global financial system had become more connected than ever before. Banks lent enormous amounts of money. Credit expanded, and in the United States, housing prices continued rising. Millions of mortgages were created. Many were bundled into complex financial products and sold throughout the global system. As long as housing prices kept rising, everything appeared to work. But then, the housing market began to fall. Borrowers defaulted. Mortgage-related assets lost value. Banks discovered that enormous losses were hidden inside the financial system. And in September 2008, one of America's largest investment banks, Lehman Brothers, collapsed. Fear spread almost instantly. Banks stopped trusting one another. Credit markets came under enormous pressure. Stock markets plunged. Businesses struggled. Millions lost jobs. What began inside the American housing market became a global financial crisis. Governments and central banks responded with extraordinary measures to stabilize the financial system. The world recovered, but the lesson was difficult to ignore. Global connectivity could spread prosperity across the planet, but it could also spread crisis. Then, in 2020, the world experienced a completely different shock: a pandemic. Factories closed, flights disappeared, businesses stopped operating, supply chains were disrupted. Governments spent enormous amounts to protect households, businesses, and economies. Central banks responded aggressively. When economies reopened, demand recovered, while many supply chains were still struggling. Energy and commodity shocks added further pressure. Inflation surged across many countries. Once again, a crisis demonstrated how interconnected the global economy had become. Different causes, different eras, but one recurring lesson. Economic systems depend on confidence. Confidence in banks, confidence in currencies, confidence in governments, confidence in the future. When that confidence disappears, fear can spread faster than money. But economic crises also teach us something else. Systems can change. Regulations can evolve. Institutions can learn. And societies can rebuild. The next great crisis may begin in a place we do not expect. Debt, technology, geopolitical conflict, energy, financial markets, or something we have not yet imagined? No one knows. Perhaps the greatest danger is not that economies sometimes collapse. Perhaps it is that every generation eventually begins to believe the next collapse cannot happen to them.